Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, we had another wild week on this roller coaster of a ride that we're calling the stock market. And from what I can see on the close today, it may not be over just yet. Now, is that a reason for you to fear what's going on? I'm going to say absolutely not, because for the option traders especially, there's opportunity everywhere. Even in a down market like today, you can make some good profits. But of course, like anything else, it takes time to learn the strategies. It takes time to learn how to manage risk. And if you are even thinking about jumping into this pool with absolutely no experience, I'm going to strongly advise that you do not do that, but most definitely plug in to these reports, to my webinars, and learn as much as you can, because I think this volatility is going to continue for a while. And with that volatility, we can realize some profits, not just from the option traders, of course, but swing traders who know how to read the charts and manage risk can take small positions and not risk everything that you've worked for your whole life. So with all of the news that we're seeing around the country, fear has taken its hold, of course, on not just Americans, but for the most part for everyone in the world, as they watch in fear and hope, of course, that things are going to get better. Well, hope is not a strategy. It's an emotion. It's a belief system. But we are latching on to these technical charts to give us the signals. Now, let me start right off the bat by looking at the S&P. The S&P right here closed with a bearish engulfing pattern. Let me zoom in here. It closed on a bearish engulfing pattern that engulfed the two previous green candles. And it did so on higher volume right there. That is a sell signal. It's negative. So I think on Monday we're going to see a continuation of this down move. The stochastics here turn lower. The CCI is starting to turn low, although the CCI is not looking as negative as the price action up here. But let me take a step back to show you part two of what we're looking at. We closed below a key support level, and if I take one more step back here and look at the monthly chart, we are down and starting to head towards the next support level down here, which is going to be that roll reversal line right here. The trend line, the overall trend line for the market right here, has been broken on the monthly charts. Again, that's not a bad thing if you are positioned correctly in the market. Of course, my heart goes out to the investors who are looking at their accounts dwindle, and there's little they can do aside from maybe hedging themselves or lightening up on some of the positions. But for traders and option traders especially, who is the audience I'm catering to, this is an absolute field day. So that's the spiders. Now let me go back to the weekly chart, and I'm going to look at the VIX here. Right, the VIX is more or less a fear index. It's giving us the volatility of the market. And while I'm telling you that the S&P is looking more bearish, the VIX, although it's looking bearish, that's a bullish indication for the S&P. The only thing is we're looking at a weekly chart here. So what I think we're going to see next week, especially in the VIX, is this is a hammer pattern. I'm going to erase this and then redraw the lines. In fact, let me erase all lines here and redraw them for you. This is a bullish candle, short term. So I think the markets next week, the VIX is going to rally, which means because the VIX is inversely related, the S&P will go lower. And then I believe we're going to start to see the VIX turn lower just like that. There are gaps below the market on the daily charts. Okay, there are gaps below the market on the weekly charts. Again, I've said this before, I'll say it again. Ultimately, we will come back to that level. It's going to take a while. It's going to take some months. But ultimately, I think we're going to pull back as the fear subsides. So keep an eye on the VIX. Keep an eye on the market, guys. This coming Monday, and I'll repeat this coming Monday, we're having an open house Q&A session. I'll give you the link at the very end so you can register. It's free. Invite your friends, especially your family members. Get them out there. Let them look at what's going on, because I have information, whether you're an investor, a trader, or none of the above. The information that I have for you will help at least ease some of the fear so you can see the light at the end of this tunnel. All right? We should not be focusing on fear and anxiety. We should be focusing on a plan that can help you, and I truly believe this can. So that's the VIX. If we look at the diamonds, the volume is still increasing on the way down. These are weekly charts, mind you. The increase in volume on the way down tells us the sellers are still in force. So for the short term, I think the diamonds are going to go lower. I have to condense the price axis there. I think the diamonds are going to go lower because that's a bearish engulfing pattern. And then ultimately, I think we're going to start to see a bounce. I'm not even going to pick that bottom just yet, because we have to see a steady drop in volume here. We have to see the indicators starting to turn up. I think ultimately the CCI will turn down next week early on, and then it'll start to move up like that. All right, so keep an eye on that. If you're in cash, stay in cash for now, and then when you start to see opportunity, ease into the market. I'm doing this for our subscribers who subscribe to the Equity Oracle, which is a trade alert service, and the Option Oracle. We're making money on the options as well. We got into a long position in Johnson & Johnson through the puts. Johnson & Johnson obviously is in demand right now, among other things. And again, you have to pick and choose. I'm going to talk a lot more about this on Monday. Looking at a more broad-based index in the Russell 2000, not looking as bearish, believe it or not. We don't have a bearish engulfing pattern. In fact, the Russell 2000, which obviously has smaller cap stocks in there, is actually showing a buy signal on the CCI. So I wouldn't be surprised to see the Russell 2000 go up as the spiders and the diamonds go down. Again, these are crazy times. Don't ever think that the markets are going to, correlate directly. A lot of times they don't. There's a gap above the market on the Russell 2000. I'm going to lower that as a possible price target down the road, right, as we look for some type of a retracement or a bounce. So that's a Russell 2000. Still looking pretty good. Buy signal right there. As I magnify that for you, that's when the blue line crosses over the green signal line. And once that blue line eventually goes over the zero line, that's a momentum line, we could see an incredible bounce that might surprise all of us. All right, there's still a lot of timid money out there. They're waiting for that bottom. They're waiting for convincing signals. I don't know what kind of news is going to come out over the weekend, but I certainly hope we're going to see more positive news come out. That's, of course, if the media can let up on our president and let him do his job and lead the country and ease the fear of the Americans out there, because right now, fear is not a good thing for recovery. Maybe it's a good thing for option trades, but it's not a good thing for recovery. And we as Americans, I truly believe, need to help ease that pain, ease that fear, get people focused on what's good and not bad, and together we'll be able to pull out of this. I'm absolutely certain of that. I've seen it before many times. I've seen it, and I'll see it again. 1987 was my time when I took my big bath, as I mentioned before. And I'm going to tell you something, we will recover. We saw big moves then. We saw the bubble in 2000. We saw 2008. Again, a lot of panic, a lot of capitulation, but we recovered. Now again, the tech sector, not looking as bullish as the Russell 2000. However, the tech sector has a good, strong support level here in that trend line. I'm going to erase this, tell you what I think is going to happen for the tech sector. I think we're going to move lower early on, Monday, Tuesday, before we see some kind of a bounce down here. The good news, again, that's a bearish engulfing pattern, but we see it on lower volume. And the CCI is still showing a positive divergence. As prices hover down here on these lows, for the Qs right around 170, the CCI still keeps creeping up with higher lows. All right, so keep an eye on that CCI, keep an eye on the volume, keep an eye on the candles, keep an eye on the market, guys. Plug into the weekly market report. Just go to themarketguys.com, go to the front page right there, scroll down just a little bit, and you will see the registration link for Monday's open house Q&A. Click on that, and it will bring you to the registration link. Again, it's free. Share this, please. I am taking advantage of social media like I've never done before. Please help get the word out, whether people are trading or not. What I'm going to talk about on Monday is going to help people feel a little bit better, because there is a rainbow out there. You just have to know where to look in the sky. It's hidden behind a couple of clouds, but it's out there, and I want to focus everyone's attention on what's good and, again, focus on the opportunities. So have a great weekend. Hopefully I'll talk to you on Monday, and we'll see you then. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.